Good morning, friends. My name is Narayan. I'm a full-time trader. I normally trade F&O and also in equity markets. In my last YouTube video, you would have checked, we were talking about stop loss. And basically what I had covered was stop loss, how it has to be kept, how do we arrive at a stop loss. And we had gone quite deep into it and we discussed the nitty-gritties of stop loss. Today, as an extension of the earlier video, I would be talking about stop loss, but we will discuss few new concepts which I believe will be quite helpful for traders and investors both. Because stop loss is something very important, and it is something like if you don't operate without a stop loss, you are driving a car without a brake, and it can be very disastrous to your trading career. So stop loss is very important, and it is very pertinent to note that without having stop losses, it has been found that most of the people have been losing big amounts in market. At times, people lose their entire fortune and their entire earnings just because they gave a loose kind of thought towards stop loss, and they felt that is not the best way to trade. So stop loss is very important, and we need to understand how stop losses are managed and what are the various means and ways of achieving your stop loss and targets. So today, let us talk about stop loss in detail, and I would like to tell you that stop loss is something which you have to manage holistically, and it is something individualistic. This was discussed in last time's YouTube video also, but again, I would like to make this a point because many times it has been found that people keep on keeping some levels which are quite arbitrary, which are never linked to their position sizing or capital. So when you keep a stop loss, what you need to understand is, first thing is the stop loss should be linked to the kind of capital or the money management which you feel is best for you, which is best suited to you. Now, how does a stop loss work? Even though stop loss is a numerical figure, actually stop loss, more than being a numerical figure, it actually works more on the psychology of a trader, because the moment you know the amount of money which you are ready to lose in a particular trade, the way you think, the way you act in your trade management is something different from a trader who doesn't know how much he is going to lose in a trade. Now, this itself becomes a very big differentiator when you know that how much you're going to lose at the start of the trade. Now, how much you're going to lose is something, as I said, based on your percentage of the capital or the amount of money which you're ready to lose in a particular trade. This can be from few thousands to few lakhs based on the size and capital with which a trader or an investor operates. Now, for example, let us take that you are taking a trade and you have decided that probably 5,000 is the amount which you can lose in this trade based on the system and based on the entries, obviously, which you would have worked. So this gives you clear headroom to concentrate on trading, and it also gives you little amount of, a tension-free ride when you're actually managing the trade. Because the moment you have a clear idea of how much you can lose, I would say 90% of the battle is won, because most of the people don't even know how much they're going to lose in a trade. So by fixing a stop loss limit, rather by fixing an amount which you can lose in a particular trade, gives you a lot of confidence and a lot of headroom to stay in the trade. Because more than entering the trade, you have to remember is the trade management or the execution of the trade, which is very important. Now, once you are into the trade and you know this is the amount of money you can lose, you will be able to act freely, you will be able to think freely, you will be able to operate with the kind of independence which many people lack in this market. And you don't have to be constantly, searching the screen or refreshing the screen, because refreshing the screen is not going to take the market up or down. It is basically the market forces which eventually work. So once you know what is the kind of money you're going to lose in the market, it gives you a lot of peace, and I would say it gives you a lot of bandwidth to stay on the trade. So henceforth, whenever you take a trade, beforehand decide what is the kind of money you are able to lose or you will be in a position to lose. And always remember, this amount should be something which is part of your overall capital, and it should not be arbitrary. Because many people, what they do is, suppose you are given to buy Idea or Vodafone like a stock, which is quoting at 10 and 12 rupees. You have a big position sizing, and the moment if somebody refers you to buy Reliance, your position sizing differs. So position sizing has to be kept constant, and even the amount of percentage of losses has to be kept constant. And if you do this kind of an exercise and you say 50 or 100 trades over a period of time, you will find that you are slowly becoming a profitable trader, or the loss which you incur in some traders, that will be kept at control. Otherwise, if you keep on changing your position sizing and stop losses arbitrarily based on trades or the trades which you like, that will not give you the optimal trade, because your entire matrix will go for a toss. It's normally observed that professional traders always keep their performance and check it over a period of time. And it is not done on a trade to trade basis. You need to keep your performance check probably at a quarterly level, or after 6 months, when you have done a series of trades and you see certain trades which are working in your favor and certain trades which may not work. So this kind of an exercise not only gives you confidence, it also helps you in planning better money management, better stop losses, and you also understand that trading is not a clear journey. It has got its upheavals, but with the proper money management and proper stop loss, you will be able to eventually win the markets. I hope stop loss concepts are getting clearer to you. In my upcoming videos, we will talk more details on stop loss, because I feel a trader, either a novice or a professional trader, has to always focus on money management and stop loss. And these two are very strong pillars to ultimately make you a consistently profit making trader. Thank you and have a good weekend.